All right, what's up, Facebook and YouTube? This is James Hollingsworth, Working People's Podcast, where everybody desires to build generational wealth and a financial legacy for their family. So today, I want to do just a little short video to kind of dive into the aspect where there are people that's on the left side, right side, this great gulf divide that believes that real estate is the way to go. And then you have some people that believe, okay, investing is the way to go. And it's like some kind of way, they don't believe that there could be a merger of the two, or they believe that these two ideals about building some type of financial foundation, they have to be one or the other, or separate, or however, right? Or that one is better than the other. I often see people or hear people kind of following that frame of mind. So I wanted to dive into the investment component and show you some of the, not just the benefits of the investing piece into the market in terms of buying or purchasing paper assets, but I wanted to give you also a comparison of some of the pieces that get overlooked when you consider investing in the market, and comparing that to the benefits of real estate as well, right? Because some people think that these benefits exist over here on the real estate side, and so we're going to do this because they don't exist over here on the market, the stock market side, and they actually do. They just look a different way, and you have to approach them with a different strategy. So I want to kind of deep dive into why I like to invest in the market and how you can extract some of those components of and benefits that you would get on the real estate side and get them on the investing side in the market. So first I want to talk about, we know with real estate you get appreciation, but because we've gone through the COVID season, it seems to be that many people think that it's typical to see the type of appreciation that we saw in real estate in the housing market, that we saw during the COVID time and since COVID. But that's not typical to see that type of growth in a short period of time in real estate. You typically see, if you got a 4% annual, if you got a 6% annual growth rate as far as appreciation in your real estate, when I'm talking about more residential stuff, right? More residential stuff, because you calculate residential completely different than the way you calculate commercial. But on the residential side, if you were getting a steady 4% growth, 5% growth, 6% growth, and if you lucked up on an 8% growth, you know what I'm saying? But 4%, it's pretty good to say 3, 4, 5% annual growth. 6% I think would be outstanding of appreciable growth every year annually. That's good, right? But on the investment side, you can see growth rates depending on what you're investing in. It's like you can see a 20, 30, 40% growth rate on a particular stock depending on what you're investing in. And I'm connected with guys that, when a few months ago, this one particular stock, I'm not telling you to buy, trade, sell, hold, or do anything in this stock, as I mentioned the name, but when NVIDIA dropped those numbers, or recently, a few months ago or so, when Tesla dropped their numbers, and boom, you saw people coming out big time in one day, depending on how many shares they had accumulated and owned. So you still get appreciable growth, yes, in real estate, but you also get appreciable growth through your cost basis on the market side, investing in stocks. So you'll have a price that you bought in at if you bought a lump sum, or if you dollar cost averaged, by taking a specific amount over a period of time and invested it, you'll have a cost basis. So you'll have an amount that's kind of averaged out that you bought in at, but then you'll have the current market price, right? And so you will see appreciable growth also on the stock market side, right? So that's one thing. That's in common for both. Also, the perception is about cash flow in real estate. Yes, you can cash flow it quicker right out the box if you do your calculations and you do your numbers correct. However, people forget about the components of dividends that blue chip stocks and ETFs and things like that pay out. Growth ETFs and growth type, large cap, large market capitalization stocks and things pay out. You got dividends, and those dividends, you can reinvest those dividends to purchase more shares, or you can have those dividends paid out to you in income. So there's income producing stocks. Oftentimes back in the day, we used to look at utility stocks as income producing stocks because they paid great dividends and stuff like that. And they were a little bit safer back in the day. That's how they were viewed. But you got bonds, you got corporate bonds, municipal bonds, you got all different types of bonds and treasury issued bonds that pay dividends. And if you got enough currency and cash or savings that you've been working with and that you've accumulated, you can create for yourself a monthly income, or cash flow from those dividends. And that's a huge thing that many people are diving into now, that especially those people that are part of the FIRE movement. I saw recently a video of a guy who he was like, that was his niche, that was his thing. So he made sure that as he was building his retirement portfolio, that he was purchasing stocks that paid dividends. So once he accumulated enough shares of those types of stocks and he had built up his portfolio and had a huge amount of volume built up, he was receiving a nice income in his retirement years. So we used to even look at certain annuities. I'm not fond of like typical your average type of annuities, the way they were structured before, but they're for the purpose of creating income so that you will have a steady source of cash flow, the same as you get out of real estate. Now, like I say, it's going to be done different because you can cash flow real estate pretty much, right out the box, if you do your numbers and do your calculations right. And sometimes on the market side, when you're investing in stocks and things, it takes a while to accumulate enough shares and purchasing and reinvesting enough dividends to create enough income for yourself, right? But it can be done. It is done all the time. And that's one of the ways that people set themselves up to have enough income coming in their latter years, in their retirement years, by setting up a portfolio that encompasses dividend-paying stocks and income-producing stocks, and they set up an allocation of their portfolio that's created for the purpose of creating income. All right. So also, we can look at the aspect of having an asset that can be a liquidity-based or asset-backed equity type position. By that, what I mean is, once you build up enough shares in the market, right, those shares can be leveraged, and actually, in a lot of ways, they can be more liquid than real estate can be, because now you have yes, you can incur some capital gains and distribution taxes and things like that. So that's a different subject to talk about, the tax components. But you can maintain a pretty sweet position that's relatively liquid when you're invested in stocks in the market. That's a lot easier to sell and a quicker sale than something that's invested in real estate. And with that sale, you can take those dollars and redistribute them or do whatever you want to do, right? As well as oftentimes with the same as with real estate, with shares of stock, you can actually borrow against that asset, especially with it being stocks and being held in a relatively liquid position, right? You can leverage that position and take loans and borrow against it, right? And there are certain financial institutions that may be set up just where it's pretty easy to do that if you have enough shares, and you can kind of look at it as being liquidity, right? Because it's actually equity built up in there, just in the fact that you own those shares, and those shares have a market value, right? Especially if you're in a position where you're in a blue chip type stock, or you're in a more growth type position, or you're in a income producing position. That position becomes pretty liquid, and it builds up quite a bit of equity, where oftentimes you can use that as an asset-backed type loan position, right? So you got a lot more functionality in that position in terms of how you can take that investment and liquidate out of that position and create for yourself, some serious cash on hand, and put it in a position where now you're holding it in a more principally secured position. So I wanted to kind of share that because I wanted to kind of strip away the perception that, well, if you want to cash flow, you got to go to real estate side. No, you can cash flow on the market side too. It's just done different with a different strategy, and it's often looking at a long-term strategy unless you already got the cash up front. So what a lot of people will do is you could take some of your money that you may have accumulated through business or other things, and you could put it in a position over here in the market where it can produce for you some type of cash flow if you put it in an income producing or dividend type position in the market. So also, well, I don't want to get into the whole tax stuff because you're going to have a whole different type of strategy on this side with the real estate than you will on this side with the market. But there are ways to position yourself in a tax position, especially on the market side, when you're looking to then potentially transfer this over here in the same way you would do on the real estate side. If you're getting ready to transfer that over to, say, the next generation after, your demise. I'm just saying there are ways to do it. I won't dive into it here, but there are ways that you can do it. So don't be thinking like I say, it's no cookie cutter way. And you don't have to be sold out to one way or the other, or keep believing all the people that try to tell you, well, if you want to do this, you got to do it over here in real estate because you can't do it over here in the market. And that's just not, it's just blatantly not true. So I hope you got some benefit out of this relatively short video with me going through an explanation of the benefits of investing in the stock market for the purpose of appreciation, cash flow, income through dividends, as well as interest earned, and the rule of 72 being your best friend, whereby the interest that you've earned on the interest, you continue to earn interest on that interest, right? Perpetually until you decide to liquidate that position, as well as you get the liquidity and the asset-backed position of just equity just in that position just because you're holding it in the market through whatever funds or stocks or bonds or other cash equivalents that you would hold and own. All right. Once again, thank you for watching this short video. It's been James Hollingsworth, the Working People's Podcast. If you watch this video on YouTube, subscribe to the channel. Also press that notification bell. as well as give us a thumbs up on the video. You can do the same thing here on Facebook. Drop me some comments below. Give me a thumbs up, heart. We love the hearts, right? But I want to hear your thoughts on the things I just said in this video. Do you agree? Do you disagree? If you disagree, with why? Or some of these things that I've just mentioned to you, these concepts, are they new? Are you hearing them for the first time? Did you get anything that was beneficial that you heard out of this video that will motivate and encourage you to begin to get your feet wet in investing in the market? And one of the safe, I won't say safe, I shouldn't do that. One of a great way to do that is just dollar cost averaging into the market, taking a percentage of your income and consistently, monthly, weekly, bi-weekly, investing it into the market and building yourself up some appreciable assets, because being invested in the market in paper and paper assets, they are appreciable assets as well. All right, thanks again for watching. Peace.